Hey, this is Rajat Bose here. I welcome you to our next edition of Weekend Market Review and Stock Recommendations. Now we are going to present our outlook on the indices, Nifty, Bank Nifty and the CNX MIDCAP. Now we are going to deal with the indices. First comes the Nifty and the Bank Nifty and also the CNX MIDCAP. We will deal with three types of charts this time: daily, weekly as well as the 125-minute chart. The weekly chart, which is actually a compression of 5 daily bars, and then you will get the daily chart as usual, and there would also be a magnification. It could be a 3 times magnification, it could be a 5 times magnification as required. Well, the Nifty index has actually closed a tad lower than 18,500 mark. It closed at 18,499.35 and it is testing the upper internal trend line. It is actually encapsulated. This week's trading has been encapsulated between the upper and the lower internal trend line. But this current activity shows that the Nifty is headed for higher levels on the upside. The fact that it has closed above 18,494 Fibonacci level, its next target would be 18,680, 18,947. These are the two targets we would first look forward. Then we can actually think of above 19,000 mark levels. The point is that this is the weekly chart that you see on your screen, and this screen shows that there are only from the bottom there are only 3 red candles and rest of them, that is 6 white candles. So this means that only 3 weeks it went down, whereas for 6 weeks it went up, and whenever it has come out from a weekly correction, that is the green candle following the red candle, the green candle size is always greater than the red candle. That means whatever has been lost, much more has been gained the subsequent week. This shows the bullish momentum, and this bullish momentum gives me the confidence to project higher levels. Definitely, of course, we need to take out the all-time high of 18,887, and that is now looks pretty much likely, unless of course it falters and falls below, say, 18,137 or even lower, that is 17,970. Till such time the 18,000 mark or 17,970 support level is breached on the downside, there is not much to worry. But worry would actually happen if for any reason we see a fall below 17,800. So long as 17,800 is not breached by the Nifty, the intermediate uptrend continues elan. Now the point is that the weekly chart is clearly positive. How about the 75-minute chart? When we look at the weekly chart, we are actually compressing things, that is 5 daily candles merged into one. And in 75-minute chart, what we get is 5 times magnification, because if you divide 375 minutes a day by 5, you get 75. 575-minute sessions within that 375-minute daily session. So this is the magnification, and this also shows that the momentum has been gained for the last couple of days, that is Thursday and Friday. Of course, the last 75-minute candle is an inverted hammer, but it is inverted hammer. Looking at the candles earlier and the moving averages, it appears that even if it were to come down a bit, but the momentum will continue. But definitely, we need to see the 75-minute last candle of an inverted hammer would be crossed if 18508 is taken out. By the way, this inverted hammer is only an 28 point kind of thing, because the high is 18508 and the low is 18480. So there is every possibility that this 28 minutes would be taken care of on Monday. uh, so we can expect a higher level going forward. Of course, uh, the internal train line for the next session would be somewhere between 18,575 to about 18,625. Uh, so that is scalable, but let's see once the internal trend line is taken out, because internal trend line, upper trend line has not been breached by the Nifty so far. So that would definitely act as a major resistance. But I'm expecting that at least a test would happen, and let's see how things pan out. Overall, my feeling is that Nifty looks pretty bullish. Now to talk about the Bank Nifty closed at 43,996.50. Bank Nifty is showing a lot of traction, and it recovered last 2 days. That is, on Thursday, the monthly option and futures expiry day, that day it formed a hammer pattern, and it closed above the 20-day exponential moving average, but it failed to close above the 9-day exponential moving average. But that deficiency has been well made up on the last Friday's session. Bank Nifty closed near the day's high. It closed at 44,018. It closed at 44,018 after adjustments, and it posted a high of 44,067. It is once again very close to its all-time high. From the current level of 44,018, the Bank Nifty is about 133 points short of the all-time high of 44,151. Chances are, early part of next week, Bank Nifty will cross that level. Bank Nifty on the daily chart is showing after an inverse hammer line, then a hammer line, that was Wednesday and Thursday. Prior to that, there had been doji like formations on Monday and Tuesday. So it was more of a range bound activity between 43,500, 43,400 on the downside, and on the upside it was 44,000 to about 44,100. That kind of movement was happening, although it is still just above 44,000. But the chart pattern suggests that Bank Nifty is headed for an upswing. If you look at the 75 minutes chart, Bank Nifty is actually showing the kind of traction. 75 minutes charts is a 5 times magnification chart, because our markets are 375 minutes a day. So if you look at it, just look at the moving averages on the 75 minutes charts. The 20 unit, 9 unit, there is a bullish crossover, and the 50 unit, all those levels have been crossed by the Bank Nifty. Chances are that it is actually going to test the Bollinger Band, a higher standard deviation of 44,204. That means that would be a level higher than the all-time high. So in my view, unless the Bank Nifty falls below the 43,000 to about 42,800 mark, this is the major support zone. Unless that is taken out this week, Bank Nifty uptrend is very much intact and alive and kicking. On the other hand, if 44,151, 44,200 range is taken out, the next resistance will be 44,300. 44,300 once taken out, it is actually headed for 44,800. So I'm betting on a bullish kind of a movement by Bank Nifty, where it will post an all-time high, and at least it is likely to go and test 44,500 for a minimum, if not 44,800. The CNX MIDCAP weekly chart shows that there has been a new all-time high, and the all-time high was recorded on last Friday. The high that was made was 33,454.75, and the earlier high that was posted long back on October 2021, that was 33,243. So it's a new high, and this weekly chart of the CNX MIDCAP index clearly shows that after a long consolidation, that is a consolidation that lasted for more than 18 months, more than 1.5 years. After that, in between there had been two attempts to cross the all-time high. This time, with a big candle on the weekly chart, the CNX MIDCAP index has posted a new high. Now we are headed upwards. There is every possibility that there could be some minor correction, although for several weeks we haven't seen any correction in the mid-cap index, but there could be some correction because this is a one-way traffic kind of a thing that is going on. So there could be some kind of a break that might get applied. But overall, the chances are that the mid-cap index is actually at least 1,000-point rally from here is well nigh possible. So let's see how the daily chart, how the YTD chart shows. The YTD chart shows a phenomenon that needs to be considered. That is, if you look at the chart, look at from the month of April, this index is actually moving up in between the 9-day exponential moving average as well as the upper Bollinger Band, and most of the price activity is encapsulated within this. After it has gone into this band, it has only shown a breach of the 9-day exponential moving average, which has been acting as the lower band for this current up move. That was breached only once, not even on closing price basis. It was only an intraday basis. And finally, what we have seen is that we have seen a bounce which is above the Bollinger Band high, upper Bollinger Band high. So this signals that enormous bullish strength is there. Of course, as I said, the correction can happen any point in time, but this bullish gumption is likely to continue unless the mid-cap index falls below 32,400 mark. There is not much to worry about for the trend. I would say that it needs to go below 32 below this 32,400 levels. Better still 32,200, because that would be lower than this hammer line that was the only breach, that was 32,232. So below 32,200, if it closes, then you will find a breakdown of the current uptrend. Prior to that, it continues. Now, if we go to the 125-minute chart of this index, then you will find that it is basically the whole thing, that this 9-unit exponential moving average and the upper Bollinger Band. Again, here we see the same encapsulation. That means the upward momentum in mid-cap index is very, very strong. Very, very strong, and it is likely to move further up. I'm expecting at least another 3% rise from here, even if there were to be any kind of correction. Let's see how things pan out in the mid-cap segment. definitely mid caps are getting traction. They have been on a traction and they are getting more and more strength. Now we have reached the last segment, our most interesting part of the program. What's that? It would contain two stocks. This time there would be a banking stock and there would be a consumer stock, and the consumer stock I am recommending for the first time. Our first stock is IDFC Bank. IDFC Bank over the last couple of days has actually shown quite a bit of traction. In fact, Thursday it moved up to 68 and on Friday it closed at 69.85. Before that, you must have seen that IDFC Bank has actually shown a very short-term downtrend that started from the high of 66.90 on 16th of May, and it completed that downswing at 65.60. After that, in the couple of days, it has actually moved up considerably. So IDFC first looks pretty good. Now, once you look at the weekly chart, you get to understand that the stock is actually getting traction. On the weekly chart, there is a breakout above that 67.90, and now it is likely to move up further. My targets are 73 initially, after that 79 and 85 on the upside, and put a stop loss for this stock below 60. So up to 92 you can expect. First target would be 73, then it would be 85, and finally it would be 92. So IDFC First Bank is a buy, and IDFC First is actually going to move up. It has consolidated for a considerable period of time, and this is one company, one bank that has been performing pretty well. It is expected to do even better going forward. It can be bought not just for the short to medium term, you can actually buy it for the longer term. The target for that I have not determined as of now, but this is definitely worth holding in your portfolio. So far, if you have liked my presentation, please subscribe my channel. Press the bell button so that you get all the recommendations for the videos that I post, and also share it with others. Now I am coming to that consumer stock that you have been waiting for so long. Well, we have finally come to our the second stock, this consumer stock that I was referring to. Yes, I've never recommended this consumer stock. This is actually it helps consumer companies sell. In the process, it also makes money. Yes, you guessed it right. I'm talking about Zomato. Zomato looks pretty good. Of course, one cannot vouch for Zomato right at this point in time for the longer term, but definitely Zomato from a short to medium term perspective, it actually throws a good buying opportunity. That's why I would suggest that you can buy Zomato here and put a stop loss below 58. Again, this stock is currently at the last close is about 67.25, as you can see on the year to date chart, and the year to date chart also shows that the green moving average line, that is the 200-day exponential moving average line, it has consolidated there, and after that this fresh move has happened and it is likely to move up. Once you look at the weekly chart of Zomato, there is a base formation, and the base formation completion sign is also clearly visible. Just as it has actually moved above the 200-week exponential moving average, 200-day exponential moving average in the earlier chart, in this chart it has actually moved beyond the 50-week exponential moving average. So these are definitely positive signs. And the other thing is that Zomato has been maintaining itself for the last 5-6 weeks above its 9-week moving average as well as its 20-week moving average. So Zomato is completing its upswing. Zomato is completing its base formation. This base formation will be fully over when we see Zomato getting past the earlier high around last year November, when it posted a high of 75.45. My expectation is that Zomato is headed for much higher levels than 75, because this base formation breakouts actually give very good move on the upside. The target I would give you as the Fibonacci target of 89, and after that 94 and 105. These are the three targets that I would give you: 89, 94 and 105. As I said, that you should put your stop loss below 58. Yes, I was never very convinced about Zomato. Of course, its fundamentals have improved. It is minimizing its losses. It is likely to come to the green maybe 1 year down the road, but this is an early bird kind of an opportunity for short to medium term, and if it does well, then definitely there could be a lot more movement on the upside for this stock. But suffice it to say that I'm expecting a 50% retracement from the earlier high around 169 to the lows of 40. So I'm expecting it to climb up to at least the 50% level of 105 over the short to medium term. When I say short to medium term, I mean 3 to 6 months for a minimum. Within 6 months, it should scale up to something like 105. It may take slightly longer as well. If the market tends to lose a bit of momentum, then that can happen. But this stock has completed its base formation. Bottoms have been seen. Now it is going to go up. Thank you for watching my program till the very end. I'm really very thankful to you. Please keep watching. Please keep my other videos. If you like, do give suggestions. Comment in YouTube.